Hey guys, Steve here with the trade school video for this week. Last week we discussed the basics of reading a stock chart. Essentially that you had, your price on the right axis here, the time on the bottom, and these were called candlesticks. And I said I would go into candlesticks in a little further detail. So that's actually what we're going to do today, just to get an idea of, how to actually read price action. And it's one thing to be able to read the chart, but in the same respect you also have to know what the candles mean. You could very easily use a simple line chart, right? So a simple line chart is more, it would just be something along these lines. So you just have, this green and red line shows your price for the day. The difference is that this shows only your closing prices, which is fine for what we need. I personally like, and what I use on Thinkorswim is called candle trend. Okay, so candle trend means each one of these boxes, we're actually looking at a daily chart here, but each one of these boxes represents one day. If you were looking at a weekly chart, each box would represent 1 week. And in candlestick trend, there's actually 4 different types of candlesticks. There's open red, closed red, open green, and closed green. And they all mean a little bit different, but they have the same components. So let's start with open red. Open red means that price opened at this level here, the bottom of this box. This box is called the body of a candle. Okay, these are called the wicks, these little lines. Okay, so the bottom, or sometimes they call them tails actually too. But this body, if you have an open red box, that means that the body, again, which is this box, the price opened at the bottom of the box, moved down at some point during the day to the tail, moved all the way up to the top tail, and closed at the top of the box. So open boxes mean all the time that the price closed higher than the open. Okay, so whenever you see an open box, green or red, that's what that means. The difference between green and red open boxes depends on the price from the previous day. So in this case, the price from the previous day, the close was right here at 73.90 on this chart, and then the close the next day was 73.75. So it was a lower close, therefore the red box, but it was higher than the open, therefore the open box. Same with the open green candle. Again, the body here, this box, means that the stock opened at the bottom of the box, moved down to the bottom tail, moved up to the top tail at some point during the day, and closed at the top of the box. That's what makes the body. So this is the difference between the open and the close. Open here, close here. And the reason that this one is green is because yesterday's close was down here 72.58, right at the top of this box, and the close today was a higher close, therefore the green box. And then on the other side of things, you have the closed boxes, okay? The filled in boxes, which essentially means the same thing. Or the same thing as long as it's green because it's trending higher. The close is still higher. But the difference here is your close is lower than your open. So on this candle here on 415, your open was here at 73.59 and your close was here at the bottom of the body at 73.44. So that's the reason for the green closed candle, but it is still a green candle because it is higher than yesterday's close, right? Here's yesterday's close at 73.36. Here's today's close at 73.43. If this closing price was lower than this close, this would be a red candle. Okay, a red close candle, and that's what happens here. All right, so we have here again the day before price closed 73.67. The next day, price opened at 73.84 and closed at 73.23. Therefore, the red closed box is the closed box is because the open is greater than the close, and closing price is less than yesterday's closing price. So you really have to look at it two different ways. There's open candles and closed candles. Open candles, no matter what, price close is always greater than the open. Okay? Price moved up throughout the day. Closed candles are the opposite. Closed candles mean the closing price was lower than the open price. And depending on if it's green or red, that is the way to indicate if the price was higher or lower than yesterday's close. So as you can see, the candle trend that I use gives you a lot more information than a simple line chart would. And then as you get more into it, you can look at these charts, and there's other patterns which are way more advanced than you probably ever need to know. They're good to know, but there's different like this one's called a Gravestone Doji because it moves up through the day but basically closes at the lows of the day. Here's another one here. Okay, this is called a spinning top because really the close and open are pretty much right in the middle of the range. And when I talk about the range is from wick to wick. Okay, so like I said, there's different ways to look at candlesticks. You don't have to use candlesticks. I like to use candlesticks because I feel they give you a lot more information than a simple line chart. But again, the biggest thing to take away from looking at a candlestick is the body of the candle is the actual price action, and the difference between the open and the close, and the color of the candle is depending on if it closed higher or lower than yesterday's close. Okay, so I hope that helps. If you haven't already, please subscribe to the YouTube channel. Follow me, StockTwits, Twitter, Google+. Hit the like button below if this was helpful. And of course, if you have any questions or need further clarification, please do not hesitate to email me or provide a comment below this video, and I will be glad to answer it. We'll see you next week with another trade school video, and have a great week.